Hi guys, welcome back to my YouTube channel. So as promised to you guys, today I brought to you the first video, that is the business studies topic 1, what is business activity lesson. So let's start off. If you guys don't know, this is page number 4 in your book, that is what is business activities. So what is actually a business activity? What is a business first of all? A business is an organization that provides goods and services. Any business that provides a good or a service is known as a business or a firm. What are some features of a business? A business produces an output or provides a service, definitely. These goods and services are consumed by customers or sold second hand. Things like that. Okay, there are some businesses that aims to make a profit, and some businesses that exist for non-profit reasons or non-profit benefits. Then what are goods and services? Goods and services divide into two, that is consumer goods and services or producer goods and services. Now consumer goods and services are goods and services sold to ordinary people rather than to another business, while producer goods and services are produced by one business and sold by one business to another. Clear? So I'll give you some examples. So for consumer goods, they are smartphones, magazines, handbags, things like that. Then consumer services would be healthcare, banking, air travel, things like that. Then we have producer goods. They are delivery vans, office furniture, tools, sugarcane, and stuff like that. You also have producer services, they market research, insurance, software design, things like that. Now every business exists to satisfy needs and wants of individuals or other businesses. There's a thing called every person has needs and wants. So needs are basic requirements for human survival, while wants are people's desires for goods and services. So basic needs would be food, shelter, clothing, warmth, and stuff like that. Now these goods or the number of resources are finite. That means there's only limited number of resources. But the number of wants, the number of desires people have are infinite. There's no stop. There's unlimited needs for people. Wants for people actually. So what are the purpose of these business activities? This is this is page number 6. Businesses exist to provide goods and services. However, different types of organizations provide different goods and services for different reasons. Each type of organization has a different purpose. Yeah, there are many types of enterprises that exist, and each of them has a different purpose or a different reason. So let's see. Private enterprise. Most businesses are owned privately by individuals or groups of individuals. They are private sector businesses. What are private sector organizations and public sector organizations? Guys, this concept is businesses owned by the private or business owned by individuals and groups of individuals are private sector organizations, while businesses owned by the government or local authorities, those are public sector businesses. Okay, yeah. And then social enterprises. Some organizations in the private sector are non-profit making. Organizations such as charities, pressure groups, clubs, and societies exist for reasons other than profit. Clear? Then public enterprises. Some goods and services are provided by organizations owned by central or local government. These are public organizations. In many countries, public sector organizations often provide healthcare, education, mail delivery, policing, and many other services. So, public sector enterprises are owned by the local government or local authorities. Is the 3 types of purpose of business activities clear? Right. Then, business stakeholders. Who are stakeholders? Stakeholders are individuals or groups of individuals that have an interest in the operations of a business. They have an interest towards the business and its activities. There are different types of stakeholders. such as owners, customers, employees, managers, suppliers, government, and many more. Usually, these types of stakeholders are divided into two, that is, internal stakeholders and external stakeholders. But in your business studies book, it's not very divided, it's not really divided and known, it's just in common. So, all of these stakeholders have different objectives. Uh, Owners. A business belongs to its owners. Many small businesses are owned by individual, families, or group. These people are often called entrepreneurs. Who is an entrepreneur? An entrepreneur is a person who takes risk and starts up a business. Individual who organizes the other factors of production and risks their own money in a business venture is known as an entrepreneur. Clear? Someone who starts a new business with a risk is known as an entrepreneur because he manages the other factors of production, combines it successfully, and operates the business. Alright, then customers. Customers buy the goods and services that businesses sell. Most customers are consumers who use or consume goods and services. However, some may be other businesses. Customers want good quality products at a fair price. If they do not get them, they will spend their money elsewhere. So, customers are the people who buy the goods and services produced by the business. It can sometimes be produce the goods and services, but in the simplest case, customers are people who buy goods and services. So, they are also a part of the business and therefore a stakeholder. Employees. Employees work for businesses. They depend on businesses for their salary. However, they have other needs. They will require training so that they can do their jobs properly. They want good working conditions, fair pay and benefits, job security, and opportunities for promotion. So, those are the reasons why employees exist in a business. Then we have managers. Managers help to run most businesses. They are often employed to run the different departments in businesses, such as marketing, production, finance, and human resources. You will learn these departmental functions later on in this book. Then managers have to lead teams, solve problems, make decisions, settle disputes, and motivate workers. Managers are likely to help plan the direction of the business with its owners. They also have to control resources such as finance, equipment, time, and people. Managers are also accountable to the owners. This means they have taken responsibility if things go wrong. Okay, so managers most of the time run the business and operate the different departments in the business. So that, and they are liable to the employees. They are responsible for the owners. Then finances. Finances lend money to a business. They may have been banks, but could be individuals such as family members or private investors such as venture capitalists. Clearly, these stakeholders have a financial interest in a business and will be keen for it to do well. Yes, of course. Then we have the suppliers. Businesses that provide raw materials, parts, commercial services, and utilities such as electricity and water to other businesses are called suppliers. Relations between businesses and their suppliers must be good because they rely on each other. Businesses want good quality resources at a reasonable price. In return, suppliers will require prompt payment and regular orders. So now suppliers and businesses are in relation to each other, and they rely on each other because businesses need suppliers to provide goods and services for them. Businesses and suppliers need businesses to give them orders. Therefore, they rely on each other and they are interdependent. Interdependent means relying on each other. Alright? Then the local community. Most businesses are likely to have an impact on the local community. A business may employ a lot of people who live in the local community. If the business does well, the local community may benefit. There may be more jobs, more overtime, and more possibly higher pay. In contrast, a business may be criticized by the local community. For example, if the owners of a factory are noisy, decide to introduce night shifts, there may be complaints from local residents. Yeah, this local community is also a part of the business because the business has been placed in the surrounding. So the local community around the business obviously matters to the business. Therefore, the business should make sure that the local residents or the local community is well and happy about the business and its operations. All right. Then the government has an interest in all businesses. Why? This is because the businesses have to pay a tax to the government, and the government's main revenue is the tax revenue. Therefore, the government has an interest in all businesses and its operations. They provide employment, generate wealth, and pay taxes. Taxes from business and their employees are used to finance government spending. Tax revenue is what they spend as government expenditure mainly. And therefore, businesses' operations are very important to the government. Okay, is that clear? Yeah. Don't forget, if you have any questions, please drop it down in the comment section below, or you can join the WhatsApp group and message me, or you have my private number. You can contact me through that and clarify any doubts you guys have. Then the changing business environment. All businesses operate in a changing business environment. This means that they may be affected by external factors that are likely to change over time. Such factors include the strength of competition, the economic climate, government legislation, population trends, demand patterns, world affairs, and social factors. To survive, businesses must produce goods and services that satisfy people's needs and wants. Businesses cannot just provide goods and services. The services or goods they produce should satisfy the needs of the customers. They must they must have clear objectives and be aware that the changing environment can bring new opportunities and impose limitations. So business can change. The environment that the business operates can change due to external factors. What are external factors? External factors are factors that cannot be controlled by the business. It affects the business from outside. Therefore, they are called external factors. So the climate, competition, population, demand, social factors, government legislations, those are all external factors that affect the businesses. And because of these external factors, the business environment that the business operates changes over time. Yeah, so we've come to the end of the chapter. Again, if you have any questions, drop it down in the comment section below, or you can contact me through the contact numbers given below. So I'll give you guys a small activity. You can do it if you like to. We have this case study in page number 9 called stakeholders. If you can, just answer these 3 questions. What is meant by term business stakeholder? Name the 2 groups of stakeholders in the photograph. The goods sold in the store above are bought from suppliers. What are the possible needs of suppliers? That is 3 simple questions, and if you like, you can answer these MCQs. Question 1, MCQ 1, 2, 3, and 4. Alright guys, then we'll meet soon with a new video. Also, don't forget to subscribe my channel and click the bell icon for the latest videos, and make sure you like and comment. Thank you and see you soon.